4,000 shares at 49 rupees per share, sitting on a bit of a loss. Mayuresh, your views, and recently we had the SFB list as well, the Small Finance Bank.
Afternoon, Mangalam. Afternoon, Nigel. Yes, that has been the case. But it's been a very, very slow and gradual recovery for all these players, including Equitas Holdings. What you've probably seen in terms of the advances growth, that has shot up in the quarter gone by, 27% to 15,500 odd crores. Again, 76% of these advances are secured. So I think that is one good element in terms of the advance growth happening. The collection efficiency has gone up, and there are different segments that they operate out of: microfinance, vehicle financing. The moratorium is getting slower and slower, slowly and steadily. But still, I think the moratorium stays relatively on the higher side, and that is what is creating a little bit of an issue in terms of the overall reported numbers. I think the other parameters are holding out. So I think there are no two ways about it, right? So the liquidity coverage ratio is at 140%. The tier 1 ratio stands comfortably at 20%. ROEs are extremely strong. However, I think the 2 points that still remain a concern of sorts, or headwinds of sort for the bank or the holding company, would be how the moratoriums will keep on going lower. Is there any stress related to any of these moratoriums in the reported quarters to come in Q3, Q4, and would that require higher elevated provisioning as well, and therefore an impact on ROAs and ROEs? So I think reasonable performance, I think post the lockdown, I think, and the unlock activities, it has started improving on all these parameters, but it would still need significant improvement for a significant amount of re-rating from an earnings perspective, and therefore I think the price strength will also need to reflect this earnings momentum, which will take some time. So I think my own sense is that we being growth investors at William O'Neill, I think we love the larger private banking space. So I think that is where the action is, that is where the pitch is hotting up for you guys in terms of the cricket context.
Okay, all right. And what about the drinks breaks, Mayuresh? That we'll talk post the show. Okay, let's move on. We have Mr. Mohammad, who writes to us from Mysore with a query. He has investments, I believe, in PTC India. I'm not too sure whether or not we have further details on this. Yes, I think PTC India has been bought at an average price of around 60. Yes, and 200 shares is what he has. Richie, do you want to give him a view out here? Ruchit, we're sending you back to the pavilion. We'll sort out the audio and we'll come back to you. But for the time being, the man who's on the ground still is, Mayuresh. Mayuresh, since you're in form, tell us about PTC India.
Oh, absolutely, Nigel. And I've got my helmet on, so no worries about that.
That's important.
Yes, absolutely. Margin of safety, Nigel, always necessary. So PTC, again, from an earnings recovery, like we're talking in the case of Equitas, is going to take time, because if you probably look at their entire portfolio, right, in terms of the long-term trading and the short-term trading, the long-term PPAs are getting to the higher side, but the short-term trading portfolio still has the same in terms of the reported gross margins and the reported net margins as well. The second element, obviously, is in terms of the overall book itself and how the execution is stacking up for PTC India. So yeah, I think it would, again, being in the power space and what probably happens in terms of the overall improvement that one sees and expects from gross margins would take time in terms of earnings recovery. So again, I think our canceling methodology, our O'Neill methodology prefers growth-oriented stories. I think we prefer the specialty chemical stocks, Nigel. I think that again is where all the action is hotting up at this point.
All right, that's about PTC India. I wonder whether we have Ruchit back from... Okay, Ruchit is back with his guard to take a fresh guard. Ruchit, your thoughts on PTC India?
Yeah, thanks for bringing me back on the pitch. Well, if we look at it, then the stock has managed to hold above its 200-day moving average in last few weeks. Now, the only concern is that the volumes are not picking up in spite of some positive momentum from that support. So we believe that on the higher side, the stock has potential to go up to 56, 54, 56 kind of range, but not sure whether there would be a breakout above that until we see good volumes coming in. So hold on as of now. My advice would be for targets around 56 rupees. When it comes around 55, 56, again take a review on the stock.
All right, that's the view coming in on PTC India. With that, we have another query coming in. Mr. Chandra Panchani, right source from Greater Noida, holds about 370 shares of GE Power at an average price of 480 rupees. He's making some losses, actually big losses, close to around ₹1,00,000. Wants to know whether to hold or sell. Mayuresh, this one, a good length ball maybe?
Yeah, it might be there in the slot, but I think it needs to probably get there to hit it out of the park, right? So two things happening, which might be a little bit positive for the company, though I think the earnings are not reflecting that. So the first thing is in terms of the clarifications that the company has given out in terms of its flue gas desulfurization business. So there I think the potential is quite huge. So in their view, again, I think the entire captive power market and the FGD market is close to 225 gigawatts, out of which I think 3,000 odd crores. Around 82 gigawatt have already been given out. So orders worth 143 gigawatts still there for the grabs, worth around 35 odd thousand crores. So I think there is potential when it probably comes to this part of the business and what the parent can probably give in terms of the entire patency that it probably has in this line. The second element is also in terms of providing, I think, to NTPC and the other power players. So I think it's recently just provided an NOx reduction system to NTPC. But again, I think consistently getting out these orders, executing them, having your working capital in check, and therefore I think expecting to maintain a reasonable amount of ROEs over a period of time. I think the cycle will take some time to recover. So yeah, I think either he has to give in terms of a longer time horizon to probably stay with the stock. Otherwise, I think it's a very poor parameter on our ODL methodology. I think the master score is poor, the earnings are de-accelerating. So I think we like stocks where earnings are accelerating. So I think can hold on if you have a long view, but my opinion again, as per our ODL methodology, is go for growth-oriented stories where earnings momentum stays. Like a few of the private sector banks, a few of the specialty chemical players, or even a few of the cement players that Nigel very well tracks, where numbers have been awesome so far.
Okay, all right, gentlemen, we'll go on ₹6. Long-term investor wants to know whether or not to hold on or to sell. Oh, he's making a bit of a loss out there. Oh, that's more or less break even because he's got 1,000 shares, so that loss will be actually only around 3,000 rupees. Mayuresh, what would your advice be? I remember HCL Tech, it had that valuation comfort. It was trading at a discount to Infosys as well as to TCS, big discount to TCS. At around 846, risk reward in the favor, or you'll advise to book out?
I think it's very much in the favor, Nigel. And what IT companies have exhibited in general, both in terms of constant currency growth and in terms of the guidance that they've started giving out, I think it's a very positive connotation that comes through. So on one hand, I think the constant currency growth, because of the strong order books that they carry and the sub-segments that they're operating out of, BFSI, retail, manufacturing, with a huge overhang behind us in terms of the US presidential elections, and when you're probably looking at Q3 in terms of Christmas holidays, furloughs, I think that is expected that the margins might be a little bit soft this quarter around. But a lot of spending is expected to come through in Q4, specifically in view of what has happened because of the COVID pandemic. So a lot of order flows expected in terms of digitalization of a lot of business processes and multi-million-dollar orders getting renewed. Again, I think the plus point was that a lot of travel got avoided. Therefore, I think the optimization in terms of the cost structure on the EBIT front was exhibited in a very nice fashion for most IT companies, large or mid-cap. HCL Tech, in terms of maintenance of their constant currency growth, expecting EBIT margins to maintain within that band of 20.5, 21.5%. And again, the business segments that they work out of IMS, engineering expected to come back strongly, and BFSI as well. I think all those elements should hold out together, strong order book and strong dividend payouts as well. So no need to worry. I think you can very well hold on to the stock.
All right, that's the word coming in on HCL Tech. We'll ask Mayuresh to take a single and go off strike. Meanwhile, we get Ruchit for the next query in. Jaspreet Dhillon writes to us from New Delhi, holds about 800 shares of ITC at 167 rupees. A long-term investor wants to know whether to hold or sell. Sitting on a bit of a green tinge right now, perhaps one of the few who would be sitting on some money on ITC. Fundamentally, there's absolutely nothing wrong against ITC's valuations at 13 times, has a fair amount of cash on the balance sheet, cash cow in terms of their tobacco business. So nothing can be, argued against fundamentally for ITC apart from the ESG funds, etc. They report their numbers today, but let's go across to Ruchit and throw him this googly as to what does our viewer do out here. He's sitting on some tinge of green, but should he book out? Are the charts suggesting any sort of up move? Because this week it's done well. after underperforming for a fairly long time, Ruchit.
So Mangalam, if you look at technically, I think the price correction is already behind us now. The stock has seen a huge underperformance compared to some other names in the recent past. In fact, in last couple of years. Now, if I look at some of the long-term charts on the monthly chart, then 140, 150 range has formed a very strong support base. The volumes have started picking up in the recent past when the prices were going up, and also the momentum readings are showing some positive move from the oversold